Hey everybody, big thank you for being there and all the support. This is a meaty one today. We're going to go through all of the models. I've been building pricing models for a huge part of my entire life, and this is next level. And I worked with Dr. Watson on a lot of this for nearly 2 weeks now at this stage. So if you love math, you're going to love this. If you don't like math and formulas, skip the first 5 minutes, go get a coffee and come back later. And the real juice is towards the latter half. But this is all about Metcalfe's law. And the question is, does it drive Bitcoin price? And how does it correspond to other models that are out there? So we did this. We benchmarked Metcalfe's law against a whole bunch of other models from places like Fidelity, ARK Invest, my own, Robert Breedlove's models, Greg Foss, etc., to try to predict exactly where Bitcoin is going by the year 2030. And we took an average of averages, and we have at the very end, my bear case, expected case, and bull case, which is an average of all the models, and there's about 8 of them. So you guys will enjoy this one, and it might make people feel better now that Bitcoin's down around 40,000 again. Where's the future? And I've been saying for years, the future's very bright, so just hang tight, everybody. Math, money, and freedom, and of course, yeah, we know the drill. Let's go. So today's story literally is the multi-million-dollar question. Does Metcalfe's law govern Bitcoin price? And are we going to look back in history and look and say, wow, I wish I bought more? So let's see. First of all, what is Metcalfe's law? And a lot of people have been talking about this for a long time. Basically, Professor Metcalfe created it to create the value of a network, and it's a function of the number of possible connections. The value of the network is a function of the number of possible connections proportional to n squared. So the simple way to think about it real quick is this. If you have 10 nodes, the value is 100. 10 times 10 is 100. If you have 1 node, the value is 1. If you have 11 nodes, that value of 100 goes to 121. If you have 12 nodes, it goes to 144. So a quiz for everybody out there. If you have 131 nodes, drop a comment below as to what the value of that network is. And then it'll give you a little exercise to how to value the Bitcoin network, because the Bitcoin network is a function of the number of users, number of wallets, etc. And we'll show you how we derive that as well. So a lot of the idea behind this video comes from Tim Peterson. He wrote a paper that applied Metcalfe's law to Bitcoin to derive the value of Bitcoin back in 2018. And we took the model presented in this paper and mapped on our assumptions overlaid on top and inputs to project it out to 2030. So the model, as you know, based on the paper, etc., will go forward a lot of maths too. We will talk about some of the formula beginning with the model itself. So let's dive into the model. We can calculate Metcalfe's value for Bitcoin from the log number of connections represented by transaction pairs. That's very important to remember. We'll talk more about that in a minute. Multiplied by a network constant, proportionality, called A, and divided by the Gompertz sigmoid. Now, a sigmoid function describes the growth as being slow at the beginning, like Bitcoin, and then as adoption increases, it accelerates, and then it tails off after a certain level of saturation. But don't get too bogged down into that. But here are the model definitions. Let's look at each of the inputs. It's actually relatively simple. The proportionality factor, A, is Metcalfe's network constant of proportionality, which describes the net value add in dollars of each additional user. TP, not toilet paper, transaction pairs, is the number of possible connections in the network represented by transaction pairs, and TP is derived from the number of wallet users. And then the G, the Gompertz sigmoid, is think of it as a mathematical decay factor or diminishing returns as we go forward for the model as it goes out. Now, calculating TP and G, we calculate transaction pairs or connections from the number of wallet users or nodes in Metcalfe's terms. And the full math of Metcalfe's reasoning leads to the sum of all possible pairings between users so that the value of the network size x minus 1, x divided by 2, with x being the number of wallet users. And Metcalfe also includes the decay factor that we discovered, the Gompertz sigmoid, and that we can derive from x times a log of 21 million divided by x, with x being the number of Bitcoin produced. Real simple, but it gets better. So we'll get to the actual price predictions in a second, so hold on. Finally, modeling A. This is kind of the tricky piece. We created two. We have the aggressive model, which is actually the standard Metcalfe model, and the conservative model. Since we cannot directly observe the proportionality factor, we must make a couple of assumptions. So first, the proportionality factor is in fact constant, meaning the value of a new user adds to the network that follows the same rate of change. Second, we assume that this rate of change is consistent in order to project out the future. And we used two different models for projecting the proportionality factor, a conservative model and an aggressive model. And the conservative model, we modeled a quadratic rate of change for the factor constant, while the aggressive model, we assumed a cubic relationship, obviously more exponential as we go. So what this all looks like, real simple. The visualization of the relationship with X being the number of Bitcoin in millions and Y being the proportionality factor constant. You can see how it goes over time. Again, slow beginning, accelerating, etc. And the number of wallet users modeled, we also assumed that the number of wallet users follows an exponential growth curve in order to project out into the future. Now, our model for wallet users is derived from the historical growth of wallet users according to Statista, publicly available information, in 3-month time intervals with 0 as the beginning. And we also modeled out the number of Bitcoin in millions, which is basically 8.07 times the log of the X minus 15.624, which is a critical model. This is basically the Bitcoin emission rate over time and how it changes. So let's talk about big numbers. This is kind of getting into the fun part. So thank you for bearing with me so far. So one of the projections that I had for 2022 was there could be 1 billion crypto users, and the adoption is going crazy. If 2021 is anything to go by, 2022, it is feasible there could be 1 billion crypto users. And remember, per this article here as well, 60% of that billion are Bitcoin users. So getting to 600 million is not beyond a stretch of imagination, but that's what we assume for 2030. We could get there by the end of this year, theoretically. So watch this space. And you know we like to sandbag on this channel as well. So here are some S-curves as well. We'll start with a few different examples. We've got broadband users, internet users, mobile phone users. And we believe mobile phone users, the blue line, is most representative of crypto and Bitcoin. And the current, believe it or not, the current number of mobile phone users in the world is 7.26 billion people. And the population is just slightly under 8 billion people. So pretty much full saturation. Of course, some people have more than one phone. So not every human being has a phone almost. But when we compare that, this growth curve to the growth curve of Bitcoin active addresses and Bitcoin addresses greater than 0.01, you can see the growth curves are not dissimilar, but we're still very early. We haven't hit that exponential rate. Now, put another way, what the S-curve looks like in terms of Bitcoin S-curve exponentiality, this is from Osprey, and they believe we are about here. So we're at the, some people say it's 2.5% adoption, global adoption, but maybe in the US it's about 12.5%. But on average in the world, we're somewhere under 4% for sure. But to give you an idea, once it starts to accelerate, we go into the exponential phase of the S-curve, and that's where we are. So just to get an idea of how early we are. So congratulations everybody for being here. Now, a quick reminder on halving, on where we are. We are in the third proper halving, and we are way off historical halvings and prices compared to the past. This is from Econometrics, and you can see the blue area is the top previous halving and the bottom previous halving. But the elements I want to point out here is the Bitcoin price. If it reaches the market cap of Apple, it's 140,000. Bitcoin price, if it hits the Plan B stock to flow cross-asset target model, 288K. And the Bitcoin price, if it matches the market cap of physical gold, 550K. We'll talk about some of the stock to flow stuff later once we get through the projections. So now we jump into the actual projections and the model for Metcalfe. This is the wallet users since inception to today. So we're nearly at the 80 million mark, and you can see the growth curve keeps going up. Now this is the historic wallet growth versus actual Bitcoin price. And you can see there's sort of a correlation, but there are times like early 2020, you can see there's a big deviation from the actual number of wallets and network growth and the Bitcoin price. So not a great guide, but a pretty good guide to tell when Bitcoin is very undervalued, based on Metcalfe's law, of course. Now, the first model we're going to show you, we've run two. We've got the Metcalfe conservative model and the Metcalfe aggressive model. This is looking back at history from January 3rd, 2022, all the way back to the beginning of Bitcoin. And we model our Bitcoin price compared to Bitcoin conservative model price from Metcalfe's law compared to actual Bitcoin price. And you can see here, it is uncanny how good the model is, but there are violent fluctuations in price. Sometimes, obviously, the Bitcoin price is above the conservative Metcalfe's law projection for this model. So that's a good thing. So we like to sandbag things here, of course. Now let's look at the what we call the aggressive, but it's actually the real Metcalfe model. And you can see here that the expected price today is around 47,500 based on the actual Metcalfe model. And of course, we are under that at 40,000 as we speak. Now, the model, though, has sometimes the actual price of Bitcoin has been above the model and sometimes below. And it is uncanny. When you smoothen it all out over time, it actually evens out pretty accurately. So again, price volatility is like this, model is like this, but when you smooth them both out over time, they're very, very similar in price. So let's talk about the conservative price projection. This is going out to 2030. We didn't go out beyond that. But here, the key takeaway from this model, again, the conservative model, we sandbagged the typical Metcalfe model. And if Metcalfe's model holds and our conservative model holds, the conservative model has Bitcoin reaching 3.4 million by 2030. $3.4 million. Remember that number, and I'll summarize all these models as well. The second model is the actual Metcalfe's model, what we call the aggressive model. This has Bitcoin reaching $11 million by 2030. Now, it's interesting when you think 11 million, and then you think about Robert Breedlove thinks Bitcoin could go to 12.5 million by the year 2031. So we'll put a whole bunch of different models together as we jump in. So first, we're going to look at stock to flow and how that works. So this model here, it's kind of an older stock to flow model, but it gives you a good graphical idea of what stock to flow means. It's the time to replenish the stock of an asset. So gold, it takes about 54 years to recreate all the gold in the world. Bitcoin currently today is about 62 years. Real estate is 100 years. And then you got silver, it's like 3 years, palladium, 1 year, etc. So that's kind of how it all works. Now, the cost to replenish all of real estate on Earth, which is a huge market unto itself, is 100 years. And that's the highest stock to flow model that we have to benchmark. So we don't know theoretically what happens above a stock to flow of 100. But get this. This is the stock to flow model based on the halvings and basically the added new supply. So if you look at the years on the left, you've got 2024, the next halving. The new supply per year will be 164,000 Bitcoin a year until beginning of 2028. In 2028, the next halving will be the fifth halving. The new supply per year will be 82,000. Remember, there's some Bitcoin miners today, they are mining 10 Bitcoin a day. That'll be 82,000 a year for the whole world. And the key factor here is that 0.86, which gives you the actual stock to flow model number. So in 2024, the stock to flow of Bitcoin will go to 116. And based on the market value of that, being the total value of real estate, for example, that would put Bitcoin at a value of about 4.76 million. Again, if the stock to flow model holds, sometime between 2024 and 2028. Now, if we go to 2028 to 2032, that'll take us up to 9.5 million. But the stock to flow of Bitcoin will be 232, which will be substantial. So again, just food for thought, stock to flow model. We'll see if it holds. The real secret here is Bitcoin is absolutely scarce. But let's go a little bit further. Let's talk about the InvestAnswers Robert Breedlove model that I created to try back into his number. And here, this is a function of a couple of things. It's a function of money printing acceleration, the amount of M2 money supply increase per year assumed at 35%, and a couple of other factors like the compound annual growth rate of Bitcoin being about 69% versus the historical 200%. This takes us to a $12.5 million price in 2030. $12.5 million. But again, that is the nominal value of Bitcoin. Of course, it'll depreciate. All of these numbers assume nominal value. Your purchasing power decreases by 15% per year. So the ballpark rule of thumb, by 2030, $1 million at this rate will be worth less than $500,000 in terms of purchasing power. So let's talk about Greg Foss. He believes Bitcoin will replace a lot of bond allocation. And he has a model where he talks about Bitcoin going to 2 million. He doesn't say when, but he says the number. So if you have the total amount of assets, 900 trillion in the world, if Bitcoin gets a 5% allocation, that's 45 trillion. By the way, the amount of negative yielding bonds today in the market is between 20 and 30 trillion. So it's easy to foresee 45 trillion going to Bitcoin if it is and remains that digital store of value type narrative as we go forward. That'll bring the Bitcoin price to about 2.142 million per Bitcoin. But I took this model and I tweaked it. So what I did was I took the Greg Foss thesis and I put in global assets 900 trillion. I took in the gold allocation 11 trillion, which is about 1.22% of global assets. So if you look at all the assets in the world, 1.22% of those are held in actual physical gold. Now, if the Bitcoin allocation goes to 1%, that'll be 9 trillion market cap. And the Bitcoin price, based on 14 million Bitcoin, not 21, will take us to about 642,000. If it's double gold, that'll take us to 1.6 million. Remember, double means 2 times 1.22%. And if it becomes a Bitcoin bond replacement at 5%, that'll take us to 3.2 million. Again, based on 14 million. And if you take an expected value scenario of all of these, like 60% of the Bitcoin allocation of 1%, 30% of being double gold, and 10% probability of being a bond replacement, that takes us to an expected Bitcoin price in 2030 of about $1.178 million. Again, completely provable, feasible. We don't know where we're going to go. These are just models. But then let's talk about Fidelity. Jurriën Trimmer. He has a model which compares, remember we spoke about cell phone and S-curves? This one compares Bitcoin price to exactly that. And per the Fidelity model, the Bitcoin address count balance greater than $1 and the growth model of mobile phone users per 100 people, he maps it out and we get to a Bitcoin price of approximately $1 million by the year 2030. So again, let's take that as kind of a sandbag Fidelity $1 million model. Not bad. But there's more. So we have ARK Invest. I've also included here. Kathy Wood believes by 2030, Bitcoin will be over $1 million. So I added a value of 1.1. So here we have all the models we just discussed. We've got the Metcalfe model, 11.28 million by 2030. We have the modified Metcalfe model of 3.46 million. We've got the stock to flow of 9.5 million, hitting, if it holds, sometime between 2028 and 2032. Fidelity, $1 million. Greg Foss model, 2.142 million. The bond EV modified model that we did is 1.178 million. And the Robert Breedlove modification model that I backed into using money supply expansion, 7.3 million. Because it doesn't hit the 12 until the year later. That's what it goes exponential in 2031. So we just have 7.3 million here. And that assumes a compound annual growth rate of Bitcoin of about, I think it's 45%. So adding up an average of all of these models, that takes us to $4.625 million. So the question is for you, ladies and gentlemen in the audience, who's right? And is it worth taking an average, a composite of all of the models? Or which horse would you back? But I've got one more. So what I do is I've got my bear case, my expected case, and my bull scenario, which is actually the model average of all the models we just went through. And here it is. So my bear case right now is down to about 733,000. My bear case was 812,000 about 6 months ago, but I tweaked it down for some other circumstances. That is if Ethereum becomes a store of value or some other crypto. My expected case is now gone up a little bit to $1.19 million. And the bull case, which is the average of all the models we just went through, $4.6 million. So again, people will say, oh, this is hopium, this is pie in the sky. It's like, you got to understand, the world needs a store of value. The world needs a hard asset. The world needs something that is not, muckable with. There's a better word than that. That's what they're looking for. And the game theory is in play. 5 countries in the last 5 weeks put out legislation to make Bitcoin legal in their currencies. Just this week was Ukraine, Russia last week, etc. And there's more to come. Panama is coming in within a couple of weeks too. So let's talk about the conclusion real quick, and then we'll wrap up. So far, the Metcalfe model has held. The aggressive model has held perfectly. It works. The question is, will it work like cell phones do? If it does, we easily get above $1 million. We could easily get to 12 million by 2030. That's less than 8 years from now, ladies and gentlemen. We do expect diminishing returns over time, hence our modified model. And we don't know if Bitcoin will be here in 2030. We don't know that at all. But for now, all these models seem to play out that if it does continue the way it is and nothing messes with it, like quantum computing, we are safe. And remember as well, money printing will accelerate. So all these numbers are in nominal dollars. So again, think of $1 million today would be worth 500,000 in 8 years. Now, even my bear case, over the course of 8 years, the compound annual growth rate to go from 39,760, which is the price an hour ago, to 733,000 is only 43.95%. And this is an interesting thing here because the importance of annual compound annual growth rate is super simple. So to get to the expected case, which is 1.2 million, that has a CAGR of 52.94 over the next 8 years. And the average of all models only, and that takes us to nearly $5 million, is only 82.22%, everybody. So the question is, should you hold an allocation in Bitcoin? Well, if any of these scientific models and any of these analysts from Fidelity, ARK, etc., top bond pros like Greg Foss, if they are even halfway right, it's definitely worth holding some of this pristine asset. Not financial advice, and I'll see you all at DCA at noon. So big thank you for the likes, and if you do like it, subscribe if you haven't already. Thanks all. Bye.